In 2023, the ESM navigated through a challenging economic environment. With weakening global trade, the ongoing Russian war against Ukraine and a renewed conflict in the Middle East, growth in the euro area slowed down. The European Central Bank, as other central banks, further tightened monetary policy to subdue inflation. The euro area experienced the fastest increase in nominal interest rates since the introduction of the euro. On the positive side, inflation receded, labor markets remained strong, and the financial sector proved resilient. In these turbulent times, the ESM showed a good performance in financial markets. The ESM issues bonds and bills to refinance outstanding loans. Last year, the ESM and the EFSF together raised 28 billion euros in bonds and over 24.5 billion euros in bills from capital markets. The ESM's flexibility to print in various maturities, sizes, and currencies allowed it to adapt to market conditions and investor demand. After a 2-year absence, the ESM returned to the US dollar market and raised $3 billion with a 3-year maturity bond. The ESM will maintain its US dollar market presence as a strategic tool to strengthen the funding strategy, diversify its investor base, and achieve cost benefits for beneficiary member states. 2023 was also an opportunity for the new ESM Managing Director, Pierre Gramegna, to interact more closely with the financial sector community in Europe and Asia. With 27 new investors joining our internationally diversified network, we reached the highest number of investors since inception, 1,800. The paid-in capital plays a crucial role in the functioning of the ESM. It supports the ESM's highest credit rating, which is a key factor to borrow at competitive rates in financial markets. Last year, the ESM recorded its highest annual return on investment on its paid-in capital since its establishment, while also deploying the portfolio's large cash holdings previously placed in Eurosystem bank accounts. This has resulted in the paid-in capital being fully invested with a focus on high-quality sovereign and supranational issuers. Compared to 2022, when the ESM experienced a net loss, the ESM secured a net profit of 320.5 million euros in 2023. The environmental, social, and governance criteria, or ESG, have increasingly been integrated into the ESM's investment approach, as well as in many other activities. The ESM monitors the ESG score of its paid-in capital as part of its responsible investment effort. The ESM also increased its exposure to ESG-labelled bonds. At the end of 2023, the market value of ESG bonds held by the ESM increased to 5.2 billion euros, up from 4.5 billion euros in 2022. In response to the increasing interest in ESG practices, dialogue, and information, the ESM continues to publicly report on its ESG efforts through several flagship publications to better inform, shape, and enhance ESG-related thought leadership. The ESM also collaborates with peer institutions within international forums, such as the Network for Greening the Financial System and the European Commission Platform on Sustainable Finance, where the ESM is represented as an observer. Croatia joined the euro area on the 1st of January and became the 20th ESM member in March 2023. Now, also Croatia enjoys the benefits of being an ESM member and of being protected against future crises. Following his appointment in late 2022, the ESM Managing Director Pierre Gramegna began a tour to visit all 20 euro area members over the course of last year. The visits gave the ESM governors and other stakeholders a chance to offer their views on the ESM's role and explore the full potential of the ESM's mandate. The exchanges focused on the ESM's crisis prevention role and how the ESM can best fulfill its mandate to support its members.